You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. At Fidelity, you'll always get a great value for your options trades. And with powerful investing tools that provide clear next steps, plus independent research and a wide range of investment types, we can help you make better trading decisions. Learn more about options trading with Fidelity at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Friday, October 5th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Friday. First thing to know is the jobs report is in focus. The September employment reports will be in focus on Friday as investors look for confirmation that the Federal Reserve will increase interest rates in December. The Labor Department will release the numbers at 8:30 a.m. Eastern. On average, economists expect that non-farm payrolls rose by $185,000 last month, down from a rise of $201,000 in August. The jobless rate is expected to tick down to 3.8%. Average hourly earnings are forecast to have risen 0.3% in September, a 2.8% gain year on year. A recent flurry of strong data has increased expectations that the Fed will raise interest rates. If the non-farm payrolls report is stronger than expected and wage growth remains stagnant, yields could rise. Second thing to know today is Mike Pompeo is to visit North Korea. U.S. Secretary of State Mike Pompeo is expected to travel to North Korea for the 4th time this year. His visit on Saturday will focus on denuclearization talks with North Korean leader Kim Jong-un. Pompeo is also expected to travel to Japan, South Korea, and China between October 6th and 8th, the U.S. State Department said. The visit is ahead of a planned second summit between Kim and U.S. President Donald Trump. Third thing to know today is global stocks tumble. Global stocks wobbled on Friday with Wall Street poised to open lower as increased Treasury yields weighed on markets. Fourth thing to know today is the U.S. dollar inches forward ahead of jobs data. The greenback gained some strength on Friday as traders waited for the monthly jobs report. The U.S. dollar index was at 95.54 after hitting an overnight high of 95.78, the highest since August 20th. The dollar was boosted by upbeat economic data, increased expectations for a Fed rate hike in December. The fifth thing to know today is oil prices rise ahead of U.S. sanctions against Iran. Oil prices were slightly higher on Friday, as upcoming U.S. sanctions on Iran weighed on the market's supply outlook, and traders looked ahead to weekly rig count data. The sanctions are due to take effect November 4th and have already caused Iran's crude exports to fall. Our second story today is from investing.com. Tesla shares fall after Musk mocks SEC on Twitter. Shares of Tesla fell as much as 4% on Friday after Chief Executive Elon Musk stirred nerves about the settlement of his securities fraud lawsuit by mocking the U.S. Securities and Exchange Commission on Twitter. The tweet calling the SEC the Short Seller Enrichment Commission came just hours after a federal judge ordered Musk and the SEC to write a letter justifying a settlement, which allows him to remain in charge of Tesla. Just want to say that the Short Seller Enrichment Commission is doing incredible work. Musk, a frequent critic of investors betting against the electric car company, said in a tweet, and the name change is so on point. The electric car maker's shares plunged last week after the SEC accused Musk, 47, of fraud over false and misleading tweets on August 7th that promised to take Tesla private. The lawsuit threatened to pull Tesla and Musk into a long, drawn-out fight that could have undermined the company's operations and ability to raise capital. Our third story today is from Investing.com as well. Investors pile into emerging markets at fastest pace since April. Investors pumped money into emerging market equities and debt at the fastest rate since April, while government bonds sold off and Italian funds suffered huge redemptions. That from a Bank of America Merrill Lynch analyst, data showed on Friday. The data, which tracks fund flows in the week up to Wednesday, found that emerging markets were the biggest beneficiaries of improved risk appetite as investors poured $1.8 billion into the asset class, split evenly between debt and equities. That marks its biggest combined inflow in the sector since April. Emerging market funds are benefiting after a long period of weakness prompted by the currency crisis in Turkey and Argentina and the trade conflict between the United States and China. A sell-off in U.S. Treasuries was also a key theme this week, with investors withdrawing $1.8 billion from government bonds and treasuries on the back of stronger U.S. growth and a more hawkish tone from the U.S. Federal Reserve. Our final story today is also from Investing.com. It's a superfecta, I think. Our transportation stocks, the market's canary in a coal mine. The U.S. transportation sector, which many see as a proxy indicator for the economy's health, has retreated 2.3% from its September 14th record, hinting to some analysts that the longest bull market on record has entered its late stages. Railways, freight carriers, and package deliverers get less attention than heavy-hitting momentum stocks like Apple and Amazon. But the sector could be showing cracks in what analysts and the U.S. Federal Reserve characterize as a robust economy. Several constituents of the Dow Jones Transportation Average have provided disappointing guidance in recent months. As the third quarter reporting season approaches, investors will watch to gauge whether trade, fuel, and the dollar risks are affecting the sector's bottom line. And that, ladies and gentlemen, is news you can use for today, Friday, October 5th, 2018, your Options News Rundown. I'm Dan Passarelli, trade smart, and have a nice weekend.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free one-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.